Happy
Hey,
Tuesday. How are you?
happy Tuesday. Good, good. It is cold
Too cold.
and dusting. We have a very late dusting here in down here in Detroit or in Detroit or up. Whoever's watching, we are in Detroit, Michigan. I am Cece Machieski. I'm a guest of.
I'm Holly Amato, real estate specialist. Thank you for coming to see us today. Yeah, it's too cold. I'm over the cold. Super
Mhm.
cold, actually. Next week's going to be worse from what I hear. Single digits. Not
Yes,
good. It's going to be hats, gloves, boots,
all of it,
the
all of
parka,
it.
ski equipment. Get your ski equipment out. It's like that weather where your eyeballs hurt just being outside.
Yeah.
So, which I absolutely hate. So, fun fact today, I'm noticing that I'm going to need to potentially get my bathrooms updated because my house was built in 1999. And when I bought it, I didn't, it was not, it needed updates. So it needed a lot. So I actually got a really good deal on this house when I bought it 7 years ago. Which is what I always tell people to do, right? Don't buy the house that's the most updated, the most expensive, if unless you're gonna stay there
But
forever.
But that's what HGTV wants.
Of course.
HGTV, everything has to be done. Everything has to be perfect. That is a challenge because that's what's being fed to us in magazines and TVs. And when you're saying you bought your house from a lender perspective, I love ugly ducklings. That's what I call the homes. The house you had wasn't really considered an ugly duckling, but okay, can we talk about that today?
I was just gonna get into the bathroom updates that I need to do and everything. And I'm
Yeah,
like at
keep
that point
going.
now.
I'll
And I
talk
knew it
about
was coming.
renovation loans. So,
Yeah, like
tell
it
me about your
yeah.
bathrooms.
Well, it's like, I'm probably gonna need to just get somebody to fix it at this point. But like the shower is all tile and it's cracking at the bottom. There's like a section that's all cracking out. And I'm sure you can find this tile because it's very simple. But I'd love to just have the whole thing ripped out and redone. But we know what that costs to do that. So then my
Yes.
thought is, well, I'm just going to maybe get it fixed. And when I sell the house, I'm going to sell it as it is. It's in great condition. It's just not updated. But you said ugly duckling, and
I
it
do.
reminded me of a house that I had listed, and you helped me with the open house. We had our open house day, and everybody came through and said the same thing like,
Oh, yes.
great neighborhood, great square footage, bones, awesome, needs updating. And you were a rock star. You took over that conversation with them. I think we were even like measuring walls and things on what they could do, but also we're giving them like the 411 on how they could make it their own, modernize it without breaking the bank. I loved that conversation that you had.
So,
It was
let
one of
me
my it was a fun open house because of that.
okay, so the audience knows what we did. Holly and I, we work open houses when the seller wants to sell a property. I'm there for the financial help to discuss with buyers that are the potential buyers coming in and letting them know what they can do and what they can't do. So the house we were in was from the 1970s, original. The carpet was green, or was it yellow? Was it the harvest green or was
It
the
was
yellow? Oh my
yes, there was
gosh.
both. I feel like there were areas of both.
Okay.
We had some
So
harvest colors
wood
all over the place. We had
wood
gold and green and
paneling.
all of it.
Yeah.
Shag and wagon,
The
total.
the it had the
It's the
wood
shag and
paneling.
wagon.
It had the wood paneling, it had
Yes.
the spindles from the 70s.
Spindles.
Everything was original from the 70s. It was
Yes.
a blast from the past. It was fantastic, actually, I gotta
And
tell
it
you,
was
it
the
was
original
fantastic.
owner. So that's the other thing I'd like to say. It was the
Well
original
taken
owner.
care of. The
Original owner.
paneling,
Yep.
no buckling, no water. Usually at the
Mm-mm.
bottom, you can see if there's a water leak or the ceiling. Yes, it was gonna every room had to be redone
Yes,
because
for
it
sure.
was original. Well, with that, we use I was talking to the potential buyers coming in, talking about different types of loans that you can have on a home like this. And the biggest thing that I ended up talking about regarding the home is actually the 203K rehab loan. And a
Love
lot
it.
of people don't know what that is.
They
What's really
don't.
they don't. There's two types.
Oh, your volume went out. Are you there still?
Can you hear me?
Now we can hear you. Yep, we heard you
Okay.
say two types of the rehab loan.
Two types, sorry, someone was calling through. We have the FHA 203K loan, which there's two parts. There's a limited and then a standard.
Mhm. Oh, no, we lost her.
Oh no, I'm here.
Oh, there she is.
I
Okay.
didn't do
It's
anything.
such a
Okay.
fun day.
I didn't touch anything. And the full moon was yesterday. I don't know.
Yeah. It's just fun technology.
Yes. So then we have the home style, which is the conventional side, and there's different reasonings for each. But the 203K, the rehab loan, you can do so much with. So the limited, you can only go up to a certain amount, and then the standard, it's you can actually have I'm gonna pause for a moment. You can actually have a she shed put on the property, part of this rehab loan.
Wow. And that there are like limitations to how much you can have though, right? Is it like 35,000 or something?
So it is for the just for the standard. That's it. It's
Hmm.
easy. Um, you have to put 3.5% down, and it comes down to the future cost of the appraisal.
Right.
Of what the when you sit down and you're like, okay, the appraiser comes in and says, if this gets done, the house is going to be valued here, which is fantastic. So you're not eating into the equity because when you buy a home with a regular conventional mortgage, an ugly duckling home, you're putting 3% down, 5% down. You can't refinance and take any equity out. But with a rehab loan, what's beautiful about that, you're forecasting the value of the
Hmm.
home that's already done. So when you get into the big daddy loan of the 203K, you have to have a HUD certified contractor that's
Yes.
overseeing everything. That is the big one. So the home that we were showing actually needed that style of a loan because it exceeded, oh man, what did we think? We're like at 100,000,
I mean, I don't know that it would
80
be 100,000. I mean, if you went all out on all the
for the
products you
kitchen.
chose,
The people are
kitchen
coming
would
through, we're
you
talking about the kitchen.
yeah, the kitchen, I mean, you wouldn't have to like scrap everything with I mean, yeah, the countertops. Some of the cabinets can be saved. I mean, I know a lot of people they do the whole painting now. I guess it depends if you're just gonna scrap everything. Yes. I mean, kitchen would be 30 grand. And it was a not huge kitchen, but yeah, I would say
The
on the low
island
end, you're
had to
looking at
come
30 grand if you
in.
did that.
Correct, correct. And what's kind of cool about that, though, even though this is a single family residence, you can still do the loan on a 4 unit property, 3 unit property, 2 unit property, and have the house redone at a future value. So here you are, you're
Nice.
taking future equity and getting a loan. You can refinance 6 months later, 6 months, 6 days. You can do that later down the road and get back into a conventional loan. So for 6 months, you're taking out a loan of this style at a higher interest rate than a actual conventional loan,
Hmm.
but it makes sense to do that because you're
Oh, for sure.
utilizing the future equity. Now, in
Unless you want to
order
use cash, unless you have your own cash
no,
lying around, which most people don't have all that.
why liquefy your reserves? Why do
Exactly.
that
Yeah,
when you
it's a
can
smart way to
roll
do it.
everything in? And here's the best part. This is my favorite part. You buy low for the neighborhood. And then when
Yes.
you rehab it, always buy low.
Yes.
So when I see an ugly duckling, like an ugly duckling house, that's a weird color, that has bushes that need to be removed, you just get a really good contractor. So the contractor has to go through a vetting process. There's a whole packet. It's something I can walk you through. It sounds scary, but it's not. And what's cool about it is for the 203K, the difference between the standard for the conventional and for the FHA is a conventional side, you have 15 months to complete that project because you are a conventional buyer. An FHA buyer only has 6 months to complete the project.
Oh, wow. And that can mean something depending on how much you have to do and the time of year. I know like this house that we were in, they had just redone the roof. So they didn't need a roof. But if the roof was one of the things you needed done and it's January, you're not getting that roof done right away. You've got to wait.
Yeah, well,
So,
there's we can get that. We can push that off. That makes sense. Like you can write that into the bank and we've done that before. You just need to be careful with making sure you have a plan and sticking with the plan
right.
and sticking with the budget. So if you have the house that we had, that everything was original, had original panel, had original carpet from the 1970s,
Yeah.
those projects are so exciting. It's the ones that you walk into HGTV, that's all the equity that's there. You put your normal
Hmm.
3%, 3.5%, 5% down, and you only have that small amount of equity. If
Right.
you do this rehab and you take in the future, I mean,
Value.
let's let's say the future value potentially could be okay, how much was that home that sold for? 350,000?
We sold it for 350.
Okay. Rehab done, brand new homes are going in that neighborhood for top fours,
Yeah, I would say at least 450. I
five.
mean, none of the homes are brand new, so I don't think they're quite hitting fives in there because that I
They're
looked
going to be though.
450 to 500, but yeah, they're older homes, so they're the ones that are updated are still going to get 450, 475. In fact, I had someone tell me, "Oh, you should list that house at 375." And I didn't do it because I just was like, I don't think so. And I'm glad I didn't because we brought so many people in and so many people are like, no, 350 is the value here. And we were
Okay.
able to get multiple people interested. So
And that's amazing for a house that needed to have um so much work done to it, but that
yeah.
spoke of the neighborhood.
Yep. Yeah.
That
Cosmetically
really
we needed a little a lift. We needed a lift, as they say. Full on facelift it needed. But the most important part of a home and the people that bought it was a young family, they had a baby, is the structure, the bones, the roof was done, so that made them happy. The windows, I don't remember how old the windows were, but
they were on the older side.
yeah, the windows are going to be the biggest expense for them. And I explained to them, just do a wall side. When I did my windows, I did wall side. They give you 5 years. I don't know if they're still doing this. This was 5 years, a little over 5 years ago, because I just paid them off a few months ago. Because I'm like, why not? There's no interest. 5 months, same as cash, or 5 years, sorry. 5 years, same as cash. Super low payment, and I love the windows. And you can, don't I told them you don't have to add that into like what you're talking about because you can do the windows separately. So don't add something like windows. Windows are super expensive and that'll eat up a lot of your budget. So I tell, keep that out of it and use that money towards everything else because you
Mhm.
can get those windows financed. You might even be able to get a roof financed too. I don't know. Depends on certain who you go through and what kind of cash reserve they have. Bigger companies can do different things.
And you gotta be super careful with who you work with. Now, of
Oh
course,
yeah.
we have a packet. The contractor needs the proper permits for that city. So
Hmm.
as you're going through the packet, they're going to be asking for the insurance of the company. They're going to be asking for the bond of the company. Now, some cities require bonds and some cities don't. So that
Hmm.
could be actually omitted. So
Right.
that packet, this thick packet that the contractor has, it that's going to be doing the work will have to fill everything out. It takes a little time, it takes a little bit of organization, but why not?
Right.
Why not improve the house that you want and make it more yours and
Hmm.
not have to take liquid assets from retirement funds or save for it or do it slowly or do little bits at a here and there.
Right.
You
Because
can just
once
have
you're
it done.
inconvenienced, you just want to get it done. Like you don't want to be like death by construction process, like doing a little bit here, a little bit there, and constantly being under construction. So I like the idea of it too. I like the fact that you said like the appraisal, it can appraise. You can borrow, what is it, over like 110, is it 110%?
75
Oh, 75. So you
of
it,
the future value.
okay. Why was I thinking you could go over because it's not there yet?
Let's see. Let me double check that.
They change all the times on me too. I try to memorize all these
No.
things and it's so hard. I feel like they're always constantly changing. Once you get all the guidelines and all the things done, I don't know all the guidelines that you have, but once we feel like we know just enough to be dangerous on all the fronts, it feels like they throw us a curveball and change everything.
Right? Right here. Let me see that guideline if that's
Always fun times. But yeah, that was
mhm.
that was a fun one, and it's just a great opportunity for people, like you said, leverage the loan. Use your tools. Always know like what tools you have available. Certain loans, people walk in and always want a certain type of loan sometimes, but depends on the property. If you're in a property and it looks like you're going to need to do some things to the property and it makes sense, it's always a good idea to check into it and make
Yeah, I'm
sure.
gonna this will have to probably be a two-parter so I can look into that. So, yes, you can go up to that 110%. I know exactly what you're talking about. So that renovation value. But there is a 75,000. I thought there was a 75,000. Was there 70? I feel like there was another percentage as well. And that's what I want to look into because I know
Mhm.
110, it's up to the 110 post
So yes, you're 10%
renovation
over.
value.
Like if the house was
Post,
350, you could
yeah,
be 10% over. So you could actually, if the appraisal came under, it would be okay.
yeah.
Because
So
they'll go whatever, 110% of, like let's say 350 is, they would
mhm.
let you, they would give you. Yeah, there's a lot to it, but I'm just thankful that we have those opportunities, because if not, everybody would be turning around and trying to do, a HELOC, a home equity line, but you can't do that
You
right away.
can't do that
You can't.
because
They
you
want
only
to, but you can't,
have so much equity. So when you buy a
right? They don't have
house,
enough equity in.
that appraiser comes in. So first off, you negotiate the price. Let's keep that one house going as our example, 350. When that when you close on it, that means that appraiser gave a 350 value on that house. If you only put 3% down, you have no equity to pull out
Right.
to rehab that loan or rehab that house. There's
Right.
nothing there. We take an appraisal for the first year. So when you actually have, um, when you go to and hopefully homes sell in the neighborhood, the value goes up naturally. What you want to do, hopefully, with the value, you can refinance, right?
Right.
Problem is we take it from the actual appraisal for the first year.
Right.
After the first year, we take the value of what has sold in the neighborhood. Before that 12 months, we take your purchase agreement. So
Right.
there's no equity the first year.
Right. Yeah.
And what are you going to do? Put 20% down and then try to take it out? They
You might as
only
well just hold the cash, put as less down, unless you're well, the FHA, because then you're stuck with PMI for the lifetime of the loan.
and
Is there PMI? I'm assuming there is on a 203K because it's an FHA,
at the
correct?
oh, absolutely,
Yeah, so
because
you're gonna have PMI for the
FHA
whole life of the loan until you
for
refinance.
refinancing anyways,
Yeah, yeah,
you want to refinance. So
right.
it's a non-topic. When you weigh
Yeah.
out that money of being able to take the future value of the house, it's worth every penny. You can
Hmm.
have a pole barn. You can, under a conventional, the home style, you can put a pool in. You can
Oh,
actually add a
really?
pool. Yes.
I didn't even know that. That's
Yes.
amazing. I mean, you're not gonna get a pool for 35,000 though, but
No, that
it'll.
starts at 75,000 down here.
Oh,
In ground with the fence starts around 75,000. and that's basic.
I'm glad we're talking about this because I don't think, I mean, I knew the 203K and the guidelines with that. I had somebody that was going to go that route. We were going to use Detroit Build, like you said, get a reputable person. We only wanted to get someone who had done 203K before and understood what lender requirements were. We didn't want to get some newbie that was not going to, because there's a ton of paperwork.
There is.
And if they're slow, because contractors are notorious for, I worked in construction, my ex-husband had a construction company. They hate doing sworn statements. They hate doing all of the things that they need to do to stay on top of it, to keep getting, what they need. They're getting that money for what they're doing. And they've got to put a lot of documentation in before they're getting any funds. And they want the funds and they want the work done. And it's like this big circle. So yeah,
It
you want to get someone who's already done it before and is on the good list. Because I think they even have a list of people that are approved.
they do. They do. And to find you can take the recommendation or you can find somebody else as well.
Yeah.
Mhm.
I wouldn't go off the beaten track though if somebody had never done it. I don't know
You
that I would
need
do that.
it is a little wise to work with someone who already has a packet, that already knows what to send over to the contractor because, for example, what if the contractor has told you, "Yeah, I can do this," and actually can't do it?
Right. Exactly.
That
Because
he
that wouldn't be
can't
something strange that could happen. Saying, "Oh
he
yeah, I can do
can't
that."
produce.
Tim the
Well,
Toolman Taylor. "Oh yeah, I can do that."
no, again, they have to be licensed. There
Right.
has to be a portfolio. We have to see that. Well, that's more new construction is to see the portfolio. Oh, family. Let's talk about family. It cannot be your dad.
That makes sense.
Okay?
Yeah,
Your dad's a
that makes
builder.
sense.
It can't be your dad.
Yeah, that totally makes sense. I can
I'm
see that.
we
Yeah.
have come across that before. The
Right.
dad is a contractor, a licensed contractor.
Hmm.
It gets a little sticky with that one.
Sure.
Yeah.
I could see people
Now,
pulling scheme with that.
homeowners and for I would love to do a second part of this. So for homeowners, homeowners can only do so much. And I would love to get that down. I know homeowners can do some work on the house, very little
Hmm.
to cut costs. And I don't know if it's just painting. Oh,
Sorry.
God bless you.
Thank you.
That was so silent
I was
too.
trying not to cough because I kept this sneeze silent. It's got to come out
So
some way.
I would love a she shed. I don't even know what I would use a she shed for. I probably not even ever use it, but the idea of having a she shed or something with glass with, like, cushiony pillows everywhere, and I might read one day in a shed full of windows, the Pinterest look? We
Yes.
can do that under the rehab loan, pole
Okay.
barns, so a lot let's talk about guys.
Pole barn's a
They
great
can
idea. Yeah.
they can we can build that in. You can rehab and do a guy's garage.
I was just gonna say, or a garage. You might have a house
Yes,
that doesn't have a garage, and you're like, we want to add one.
yes. That would be the big daddy type of 203K.
Yep.
That's
Yep.
where that would come in. You need that HUD contractor to make sure everything's right. But could you imagine an epoxy floored heated garage for the guys out there? I mean, even for us
Yes, if you're
girls,
putting the
I
men
would like it.
outside, yes, because I don't want to sit outside. I like my cozy inside. But then again, I'm the only one here, so I don't have to have my own. This is everything I look around is my she shed. There's nobody else here
Yeah,
to bug
I kind
me.
of
No,
know
I
that.
love the kids. They don't bug me. I love when they're here. I miss them.
Yes.
Yeah. But no, there's so many things you can do with it. And it's just another way to leverage, again, the loan product, understanding what your options are and not so much worrying about the rate as you would worry about like how what else would I get this chunk of money. And we're telling everyone to refinance
Yes.
down the road anyways. Even if you're coming in with a regular conventional right now, we're going to tell everybody it's about 7% right now. When it comes back down, we'll be talking about refinancing anyway, so take
Why
advantage of it,
not? And
you
it's
know.
cheaper than credit cards. Credit cards are
Oh
what, at
gosh,
28%,
28%. Crazy.
32%. So what is a simple 8% or 9% on a home? That's cheaper than the Home Depot card.
Right.
I'm just saying, if you
Yeah,
have a choice between a Home Depot credit card and this type of loan, I would take this loan in a heartbeat. I
for
would
sure.
do it right. I get the right contractor and I would have a fixed plan because here's the thing, the bank is gonna hold that contractor to their word.
Mm-hmm.
So there's some safety in there. We're not gonna pay out a contractor until it's done.
Right.
He's not going he
Right.
or
Yeah.
she is not going to get paid until that work is done. So would you rather have a Home Depot or Lowe's card? Menards too. Let me throw all three in.
Yeah.
But the best part is about this, Holly, that I wanted to bring, like us going into this,
Mm-hmm.
is that inventory is low right now.
Yes.
And what's left on the market are some of the ugly ducklings out there.
Mm-hmm. Or just need a lot of work.
Yes.
They might be really cute, but just haven't been loved enough and kept
It
up.
needs and they need to be loved. Those homes
Yes.
need to be seen, loved, and when you go and you take a look at it, you have to put on different glasses. I call them like
Right.
goggles. You have to
Yeah.
view the house different, the potential of
Yes.
the house. It's like a
Mm-hmm.
new relationship. What does this relationship have? What kind of potential does it have?
Exactly.
You're looking at the potential of the home, and you
Right.
fall in love with the potential, and then you move forward and you get organized, and you come and you talk with me, they talk with you. But right now, with the inventory down, the homes that have been on the market for a little longer than they should,
Yeah.
guess what? Those are perfect for this.
It really is. It's a great opportunity, especially here in Michigan, because sellers who need to sell, a lot of the
Mhm.
times the houses like we're talking about when they're like the ugly duckling home or they're kind of beat on, a lot of times they were used as rentals. Um, or maybe a
Or
family, like an
grandma
older couple.
died.
Yes, they're
Grandma
older and they
died. Yeah.
couldn't do anything around the house, and so some things kind of had to go to the wayside and didn't get updated or didn't, they weren't able to follow through on it. So it's like, a lot of sellers right now, they know it's January, we're getting snow. Last year we didn't get much snow. This year we seems to be getting more snow than normal. So the sellers start to get a little nervous too. They want to sell it, so when you come in with a reasonable offer, you can negotiate that and get a great offer accepted, and then go at it with the loan and start doing what you need to do and just make it what you want it to be.
Mhm.
You know, like cosmetically, anything on the inside can change. You can't. The only thing I tell people, the only thing you can't change is location. You got to pick the location that you want or need. We can't change that, but everything else can be changed. I mean, the house that I just sold, he went in there. The exterior didn't even look the same. They put new siding, painted a different color. They even painted the grout on the brick. It was gleaming white. It looked fantastic. The inside, the entire thing was completely updated. So it was like night and day. So yeah, you just can't, we can't uproot the house. I mean, you can, but I won't recommend that. It's not good for the
I've seen
foundation.
homes moved. It's
Not going to
just
work
like
with the foundation, but yeah.
what when you looking at a house and the house needs a new roof and it needs minor things, you just stay with the streamline 203K. You keep under that 35,000 threshold. If you
Yep.
want to go over that 35,000 threshold, you're in the Big Daddy one. You're there at that standard FHA 203K or the
Hmm.
home style.
Hmm.
And that's where you get to think bigger and
Yes.
better. Now, you don't want to overdo the house. You can't because there's an appraisal. The
Right.
appraisal for a 203K loan, we have appraisers who specialize in this, who can forecast that future value.
And
It's
it's
easy.
great because that's going to help you as the buyer to understand, all right, so this is how much money I have and I
Let's
need to do all
spend
of
it.
these things, right? And it's like, so maybe you can't. So even if you couldn't get every single thing done, you're gonna get a really big jump on it. I would say do the kitchen or do the bathrooms. Unless you have like you said, like a if you have like a roof issue, but do some of those areas that you high traffic. Like you got to have a certain bathroom. It'd be nice to get that done before you have to totally be moved in and whatnot. And you know do the kitchen because you're going to need that. That's going to be important. You're going to want to, if you can get it done earlier, that'd be great. But yeah, just sit down and make the plan. It's always about planning everything. I think we talk a lot about getting yourself organized, planning, prepping, getting educated on everything so that you can walk in and actually enjoy the process, even though some parts are a little stressful, but you can walk in and enjoy it because you have the plan in place, you know where you're going, and you can see that final vision. You have the vision of where you're gonna end up at.
Yeah,
So,
and even talking about the city, another cool fact that I know that I've heard, I haven't done that loan. So another loan officer in my office has done that loan. One of and this is and you heard me say the big daddy on that one, the big daddy one. They ended up taking out almost $1 million.
wow.
I think it caps at 1.1 or 1.2 million.
Oh, wow.
I would have to double check that, but they were at like that 900,000 mark of taking value of the house and
Mhm.
completely redid it. So here they are in a neighborhood of a dilapidated house, and of course the future value has to support this.
Right.
It has to support
Yeah.
it, and it did, and they ended up getting a contractor and utilizing almost $900,000.
That's amazing.
Yeah, yeah.
What a great loan to have.
It's
You need more of those.
well, again, think about the credit cards.
Mhm.
So, as you're looking, if you're shopping for a house right now and you're talking about house shopping and thinking about the future, it's a great product to even consider. Like, hey, that's there. Unless you have amazing retirement funds that you want to take out, by all means, go ahead and do that too. We're not
Right.
saying you have to take this loan. This is just one tool in my toolbox that I have that I can help my clients make their home and
Right.
special without taking out of their liquid assets,
Yeah.
and
And
to
that's
look
really
at these
smart
homes
too.
different.
Yeah, it's smart to hold on to your assets or put them, let your money work for you and be investing it elsewhere and let it grow. And
Yeah.
then, because you can always come back, turn around and pay this off through a refi. So,
So I have a story. There's a local realtor closer over down to the Royal Oak, Madison Heights area, and she bought a house sight unseen.
oh wow.
I was with her and I videotaped the whole thing. It was so scary, but so much fun at the exact same time. Hi. My puppy wants to come say hi. Um, we walked in, Reader's Digest was up and stacked at least 3 feet high.
Oh my
Do you
goodness.
remember the Reader
Oh
Digest books
yes.
of soap operas?
Yes.
And oh yeah, you could tell
Oh
grandma
wow.
or the great aunt lived there. And so we're walking through and I'm recording. First reaction, they wouldn't let anybody inside the house. Purchase sight unseen, couldn't go in. We get to the kitchen. It's raining in the kitchen.
No.
When you looked up, it was one of those bungalows. So the roof had a good 2 foot, 3 foot hole in it. And then it rained so much, it went
Wow.
through that bungalow bedroom down into the kitchen and was raining in the kitchen. Now, what if a family came in? It's devastating, it's weird, but she's an investor, she couldn't have used that loan product, but what if this was a first-time home buyer? I don't remember what she picked the home up for, so let's just be hypothetical. She bought the house for 35,000, 40,000, 50,000. Now, what if a contractor comes in and says the house is valued at 170, 200,000, all said and done. You can get a new roof, you can patch all that up, gut the place, bring
I
in
hope it
the
doesn't have mold
dumpster,
damage. In my head, I'm thinking she better not have to do mold because that's 30 to 40 grand.
but you
Those
pick it
mold
up at
remediations
40,
are rough.
but you picked it up at 40,000,
Ugh.
35,000.
If you're getting
It's
close though, you're
scary.
cutting it. Yeah.
It's scary,
I would not
but
do that. I would not do a sight unseen.
oh, I
I
would.
wouldn't. I wouldn't
I
do
would.
that. Mm-mm.
I've already done it.
Yeah, I wouldn't do
I've
it.
already done it. Hey, I checked that off my bucket list already. Crazy real estate stories. I have that one.
Yeah.
But No, I would for an investment like that. I mean, maybe she picked it up cheaper than that.
I'm
So
hoping
if
with
you can
raining
pick it
into the
up,
kitchen. Yeah, I'm hoping she did.
yeah, if you pick it up for 20,000 and you put 100,000 into it, let's say then the house you have 120 into it, but it'll sell for 200,000. Who's winning?
Yeah. No, that's
She
smart.
actually she
Yeah.
holds and
That's a
rents.
good ratio right there.
Yes.
That I would take.
She holds and rents, so she didn't flip it. It was not a flipping situation, so a rehab loan would not be ideal for her but for a individual who's not scared of that.
Right. Sounds
How
like she's done it before though. So she's got people that are going to come in. If you have a
but
team of
even
people
yes, but
and you know
even
what
with
you're
the big
doing, yeah,
yeah, that's where you have to have contractors
you have
for
to.
this type,
Because
and it's not
you
for
have to know they're gonna
everybody.
come because, if you're just a person that buys a house and you're like, "Oh, they're gonna all flock to it." Not so much because they wanna stay busy and they're gonna go where the big jobs are and they're gonna stay there and make those people happy. So the onesie twosies, you're waiting.
Th With this loan, they don't get paid right away,
Yeah,
and
the loan for sure. Yeah,
they
that's why
have to
you're
satisfy
secure with that.
we are secured because they
Yeah,
need to supply, uh, um, excuse me, pictures, and we have people that go out there, the city has to check the permits need to be pulled, everything needs to be on the up to up,
yeah,
and it's a little bit more security versus
yes, for sure.
pulling out the assets, but there's so much cool things that you can do with this loan product, or even just talking about buying an ugly duckling home.
Right.
The one that kinda was hit with the ugly stick a couple times.
I think my mom or my mom or my grandmother used to say got hit with the ugly stick. And I was like, oh, that's so mean.
Well,
Probably
the
one of
house got
it's
little
probably my
beaten
mom's
up.
mom. I don't think my mom would have said something like that. It's probably my mom's mom. She was a
I
little rough
can't
around the
see
edges.
your mom seems so
Yeah,
sweet.
she wouldn't say that. Her mom though, she couldn't be more opposite. My grandma, God rest her soul, was a very harsh, kind of very rough, just a real not refined, real rough around the edges kind of a woman.
Okay.
Yeah, yeah, very different. Very different. We don't take after her. We don't take after her.
Well, it's a different generation.
But like my
Some
dad's mom was so sweet. Like and she had really bad arthritis and she was just the nicest lady ever. But yeah, it was interesting. So, well, this has been a great conversation. I love the fact that we can really delve in and get into some of these different products and scenarios because I think there's not a one solution for everything always, and people don't know, they don't know if they don't know. And sometimes I feel like some lenders might be a little lazy and not want to tell them, maybe they don't want to deal with this because I do think this probably takes longer and more work, but you need to talk to somebody who has your best interest at heart
mhm.
and wants to make sure you get what you need. That's why not all lenders are created equally, not all realtors are created equally. It matters who you choose to work with and
And
who
not all
you
banks
partner
are
up with.
created equally.
Oh gosh, no. Heck to the no on the banks and the appraisers and the underwriters.
Hold on. Hold on.
And with that, and
Hold
with
on.
that.
I got a clear to close the other day. I'm so
Oh
happy
great. Congratulations.
we're closing early. It's fantastic, but sometimes those underwriters, they really like to
Power trip.
yes.
That's
Yes,
gonna
we
be
have a
what I use as my word. That's gonna be my description of it.
yeah, we have a doozy in our office right now where it's a VA loan, which we love
Mhm.
our VAs.
Yep.
And under the VA guidelines, it's just like FHA. It's a government loan. So
Yep.
there's requirements, guidelines. Right now, they want the shed scraped and painted.
A shed.
Well, of
Come
course.
on.
Nope, it has to get done. But here's the problem. Do you think paint's gonna dry right now?
Well, no, you can't paint if it's if
I
it's
know.
not 55 degrees. You
The
literally can't.
underwriter is kicking it back, saying, nope, it has to get done. and we're all in. We have senior loan officers arguing on this point, and that one bank, and it's a good thing that we are a broker, that we are a mini correspondent. So
Yeah,
I'm a hybrid between a bank and a broker. So this one bank is actually on the broker side. We can pull that bad boy in a heartbeat.
that's
And we're
good.
sitting there and we're very mindful and we're having these sessions of how are we going to fix this? What are we going to do? And my suggestion was we already have everything done, transfer the appraisal, transfer it out, be done. Tell the bank we're taking our business somewhere else, and they're going to lose their
Absolutely.
business over something so silly.
Yeah, that's so it's not like the house is
It's
like I could
16
see where they
degrees.
would say something like, okay, if there was like areas where the wood was rotted or you know what I mean, but it's a
Well,
shed. It's
then you
not,
pull off the wood, you nail up new wood, and you paint it in the spring.
yeah,
That's a solution. Scraping and painting, but that's where you have advocates like us. We go in and we will fight with the bank on your behalf. We're not
yes.
scared to fight with the bank. And the
Yeah.
bank, we're okay if that bank loses our business if they're not doing their job. We will
Right.
full take that step in, lean into the bank and say, no, we will take our business elsewhere.
There's been a lot of that lately. I've got a friend who's an agent and she had an appraisal that came in low. Her buyer was, it was an agent owned home. And the agent wasn't going to budge. I can already tell. I can already see the
Mm,
scenario because the agent actually ended up being right. So only that's the end of the story. Is the agent was correct. Which typically, I'm not saying we're always right about everything, but typically, especially if we're listing our own home, we're not going to waste our time. And we know the value. If you live, especially the area I live in, I know this area really well. I live here, right? I'm always watching. So, anyways, long story short, um, and it was her preferred lender, and you know her now. You know her and the appraisal came in 70,000 under some crazy number. Then they were doing the rebuttal. It took them way too long because it was around Christmas time. Made everybody sit and wait. Promised, oh yeah, don't worry, we're not gonna. Oh yeah, we're gonna work through whatever, and then decided, oh, I'm giving everyone the week off. And she's like, you can't do that, right? So they waited, and it came back. Nope, sorry, they won't do it. So her buyers were really angry at this point. And so she's like, listen, I gave her a couple different people. You were one of them. I don't know what happened. I don't remember if she called you or what it was,
mm-mm.
but they got somebody on it. They got it appraised. It appraised 100,000 higher moving forward. So sometimes you just get that one underwriter. And when we get off, I'll tell you, you'll be surprised who it was because it wasn't someone you would think would have done a crappy job.
Yeah.
It was the underwriter.
Miss
The
Mystic.
underwriter wouldn't budge.
Yeah. Read Mystic's comment.
We talking about buyers waiving an inspection and entice sellers. Oh, well, no.
That's not what we're discussing right now,
100%
but
not. I would never, ever, ever. And in 10 years, I have never told a buyer to do that. And I know that was something that was being used to win in multiple offer situations in 2021. Not one of my buyers ever did it. I don't think I'd sleep at night if somebody now if they push it and really want to. I have a form that they have to sign, that they have to literally read and sign, which basically says I understand this is a huge risk I'm taking. I would never recommend doing buying a house without a home inspection. I think Cece was talking about an agent earlier that bought sight unseen, but that's an investor situation, and that's very different than a buyer like trying to purchase a home for themselves. So yeah, does it entice sellers? Absolutely. The sellers will 100% jump on it because they all know that
mhm,
something always comes up on inspections. I've only had a handful of inspections where the inspector was like, this is the cleanest house I've ever seen. There's nothing here. They usually come out with a bunch of honeydew things like honeydew list, right? But sellers not doing that stuff. It's rare for them not to come up with something where we have to talk, right? So sellers know that. They know their house isn't perfect. So they would love to have a buyer forego an inspection. But I don't have the integrity of what we do and seeing what we've seen and knowing what we know. I could never have somebody do that unless they sign that waiver saying, nope, I get it. I don't need to do it. Or maybe it's a tear down, or maybe Maybe they're in it, maybe they are going to flip it themselves and they know what they're doing. Sellers would have to disclose to other potential buyers. Sellers only have to disclose what they know. So if they haven't been up in their attic and they don't know what's going on up there, they don't have to disclose it. If they went up
Oh,
there,
use my example of my
well, and
home.
I had the same situation. Bats, right? Are we talking about the
Yes.
bats?
Mhm.
Cece and I both had
No idea.
bats.
No
Bats in the
idea.
belfry, I like to say. So I had probably 5 listings at one time. I had like 7 going, and 5 of them all had bats because it's so normal, especially when you have big trees. So
I
the
had no
inspector went up
idea.
there and they found the guano, and that's bat
Coop.
feces, and it's really bad for humans. So they have to remediate it. But yeah, you didn't know, obviously. Whenever someone hears that there's bats in their house, they freak out. They're like, because you don't know. Now, I actually heard one in the wall in my bedroom. This was after all y'all had
Mm,
them. I called the same guys. They came out and they're like, yeah, it's like a level 4. It's not really a big deal. I don't see a lot of active. I'm like, get them out. Like, fix this situation. So we
mhm.
did. So things like that. Now, what I do have to disclose, and what CC, well, you did it, so it was with a buyer. What I do
Yeah.
have to disclose though, when I go to sell, when it says history of infestation, it's not really infestation, but that's kind of where, or there's something else I think. No, that's the line right there. It's in that area, rodents and all that good stuff. I just have to say bat remediation done in 2024, and then I have the paperwork somewhere. But yeah, all I do is I do have to tell them that yes, I did have bat remediation. But it should make them happy because then they know no bats are getting in here because they found 13 little crevices and they made sure that nothing's getting back in. Tell them to
The
catch them
one-way
and bring them
door.
to me so I can put bat boxes outside. They help keep the mosquitoes down. Yeah, that's why I don't mind it. Like, I'm in a suburb, but my backyard, all tall trees because I back up to a road and I can see the bats. In the summer, I want to sit outside and I'm all living my best life until the bats come out and they start dive bombing. And I'm like, never
Yeah,
mind,
they
going
fly
back inside.
low.
I'm going back in. I'm not going to sit out here with the bats. Yeah.
No,
So
I
yeah,
love that they
anything
get
that
the
you know,
mosquitoes.
yeah, if you
Mhm.
know about something, you have to disclose it. If you know that you have water that comes in the basement in one corner when it's rains really hard. Water is a big one. You do not want to lie on that because that seller disclosure is a legal document, and so many real estate lawsuits have to do with the seller's disclosure not being filled out properly. So I'm kind of like the Gestapo on that. CC knows. I give it back to people all the time, and I'm like, listen, you want to make sure this,
Rework
and
it.
this, because I already know that they're
Mhm.
held accountable for whatever it says. So
Yeah.
now I want to say something else to Mystic because this reminds me of one more thing. Let's say I had a buyer and they did an inspection, came back and sent me a list of things and proof on the report. And let's say I decided, and I want to work with these people. Out you go. I now have to take my seller's disclosures and update them because I do know things. And if there are things that I know that correspond to questions on the seller's disclosure, I have to update them. There are many times I know of that I've had buyers walk because of big situations. And then I go back and I can see that listing still up and they haven't updated it. So if somebody wanted to be really nasty and mean, which I wouldn't do this, but if somebody wanted to, they could wait, see if that see who buys it, because you can see on the public record who bought it. You can knock on their door and say, hey, just so you know, did they disclose this, and this to you? Or did you have an inspection? Or do you know these things? Because if they didn't and they're starting to have an issue and you've got a report showing it, they're gonna be in trouble.
Yes.
This happens. These things happen in our world.
Yes, they do.
And on that note, I feel like we just had a great conversation tonight.
What I have something in my way. Oh, wow, we've been on for 15 minutes.
Yes, we have.
Actually, could not see that.
Super talkative tonight. I love it though. It's great information, and I think it's information that people need to know.
Mhm.
So, what I would love to say, anyone who's on now, or if you're watching us later, please tap the notification so you'll know when we come live, which Tuesdays, 6:30 p.m. Eastern Time, you will find us here. same place, same time. And of course, give us
Mhm.
a thumbs up, like. And if you have questions or comments, we love those. If you want to hear us talk about something else next week, please give us some ideas because we love that. That helps a lot to know what the questions are, what the hot topics are. We kind of know what some of the hot topics are, which next week we could probably do a hot topics. There's so many things going on in the world of real estate just across the country.
Yes.
Yeah, that's going to be, I think, a good topic we could do too.
Okay. Well, until then, cheers.
Until then, cheers,
Until then,
everybody.
yes.
Be blessed, and we will see you next week.
Bye.